I'm Brian Scott-Smith reporting from Philadelphia. In this edition of RIN TV, the IMF says global financial markets still fragile. Willis is expecting higher P&C rates. 100 years on and the Titanic makes history again. And we wrap up our coverage from RIMS 2012. All this and more, you're watching World Risk and Insurance News here on RIN TV. Today is the final day of the RIMS annual conference here in Philadelphia, and over the past few days we've had the opportunity to speak with conference participants from across the risk and insurance industry, including thought leaders and solution providers who support the risk management profession. And here's a look at our latest report. As the RIMS 2012 conference and exhibition draws to a close, some key themes have emerged, one of them being cyber risk, which seems to be the talk of the town, but also, and more importantly, that risk managers in the future need to take a more proactive approach rather than just a defensive one.
Risk managers are being asked more and more from the C-suite, from the board level, to take the lead on enterprise risk management and strategic risk management. They need to be involved when the strategy is being set so that they can advise and assist in maybe in allowing their companies to embrace additional opportunities.
A lower number. The challenge for risk managers is to come to the table and to help lead and drive the discussion, but also realize that at the end of the day, they can't personally own most of the management of those risks. They need to get the organization to come in and get bought in, to be more proactive, and to think about the complex mosaic of risks they have to face.
It takes a major market contraction, it takes a hard market to get large numbers of captives being created. And I think we would see more net growth in the last year or two had it not been for the recession of 2008 to 2010.
The economy obviously had a negative impact on the amount of building that was going on for the construction sector. It had a negative impact in environmental as well. Environmental coverage is a kind of a discretionary buy. So I think when people were squeezed, they tended to buy it less often. We see that starting to change.
Asia is a technologically forward part of the world. However, when it comes to buying insurance and looking at risk management generally, most of Asia, or many parts of Asia, are really in its infancy.
As we think about social media, the primary risk that we're concerned about is that of brand and reputation. And we've seen many evidences of companies, as a result of primarily employees using social media, causing brand and reputational harm to organizations.
We've seen cyber risk be an emerging risk. Reputational risk is a hot topic. Again, some risks you can purchase insurance and provide that protection. Other risks, there is not that protection, and so it really is our role as risk managers to help our organizations think about how best to manage, to mitigate those risks, and more importantly, how to leverage those risks to create opportunities for the organization.
In the weeks ahead, we'll bring you in-depth discussions from the leaders we met here at the RIMS conference. Meanwhile, you can go to the RIMS 12 webpage on RIN TV for coverage here from Philadelphia. Now let's take a look at other news. The International Monetary Fund have released their latest Global Financial Stability Report, and although it shows that risks have decreased from 6 months ago, they warn that financial markets remain fragile.
I think that with the recent initiatives that have been taken, systemic risk has been averted, but strains would remain. And this is something that would take a toll regarding the deleveraging process. So far, what we have had is that banks are moving along the good deleveraging path. That means raising capital and selling non-core assets and non-core business lines. But it's very important that the leveraging remains good and doesn't become bad. The biggest risk is that there could be a large-scale synchronized deleveraging in Europe that would take a very serious toll on credit to households and firms. That would lead to significant falls in asset prices, and this would have adverse repercussions on economic activity, both within and outside of Europe. And in order to avoid that problem, it is fundamental that the right policies are pursued at the national level and that the right actions continue to be taken at the European level to put us on a clear path towards further fiscal and financial integration. The key message is that the authorities at this very decisive moment cannot afford to relax, cannot pause. because the answer to this is more and better Europe.
In the spring edition of its Marketplace Realties report, Willis reported that property casualty rates were generally edging higher. After a challenging year for property underwriters, Willis saw catastrophe-exposed coverage rise 5 to 10%, with many accounts seeing increases up to 15% higher in the first quarter. While it is likely rates for cat risk will continue climbing in 2012, abundant capacity and weak economic conditions could temper upward pressure. In casualty and other lines of business, prices were generally flat to slightly higher, except for E&O, which saw increase of up to 20% higher based on experience. As reported in our previous program, Lloyd's is commemorating the 100-year anniversary of the sinking of the Titanic, one of the largest losses in Lloyd's history. Contributing to Lloyd's connection to the fateful cruise ship, Marsh searched its archives and uncovered the original line slip from the RMS Carpathia, the first ship to reach survivors of the Titanic. We were pleased to be present, cameras rolling, for the presentation to the Lloyd's chairman.
Very happy on behalf of Marsh to present Lloyd's and Chairman Nelson here with the original slip from the Carpathia, the first ship that arrived at the Titanic disaster site, and 700 people were saved by the Carpathia. This is the original slip.
Well, Dan, thank you very, very much indeed. This is a huge moment for Lloyd's, because the Titanic, as you know, was one of our major losses, and we mustn't forget it was a human tragedy. 1,500 lives were lost. We have the original of the slip for the Titanic, but the loan of this original slip for the Carpathia, which saved so many lives, is a really important addition to Lloyd's, and I thank you very much indeed.
Our pleasure.
It's very nice of you to do. Thank you.
Well, that's it from our programs here this week in Philadelphia. We'd like to say thank you to everyone here at the event, and I'd also like to say a personal thank you to all of the RIN TV production staff. I'm Brian Scott Smith. Join us again soon for more world risk and insurance news here on RIN TV.